Hello, hello. This is Trade Like a Sniper, episode 5. In this series, I use the replay tool on TradingView to go back in time, performing a top down analysis in order to frame a single trade. So you'll have a first hand view of how I perform a top down analysis and how I would possibly enter a trade and hit my targets. Okay, so there are a couple of things to note, such as I can't see news events, I can't go to too low of a time frame, and I can't switch time frames too much back to a higher time frame because TradingView will show me the entire range of the candle and therefore already tell me what has happened in the future, which is no good. So, all right, what I'll do is scrunch up the chart starting on the monthly, and I will go back in time to a random spot using this bar replay tool. Just let me see that I don't go too far. Okay, around this area. Eeny, meeny, miny, mo. Okay, reset the view, and now we are on the monthly. Let's see what we have. So we had price come down, take a bit of liquidity here, rebalance, start moving lower, come all the way to this low, take out this low, and now what it seems like it is expanding higher. So switch up the chart. So things I would note is that this liquidity was taken, and I would highlight that. What liquidity is it? The form of this equal lows and this swing low here. I'm sure this is COVID. Yeah, that was COVID. So price took it out quickly and started expanding higher again. So where did it come to? It came back to this area of imbalance. Normally I'd go to even higher time frames, but I'm just going to skip that here and note the imbalances here. So we have a nice monthly busy, which is a buy side imbalance, sell side inefficiency, and we have just an intermediate swing, monthly swing high here, which I'm just going to annotate, and the monthly low here. So I think I'm just going to fast forward on the monthly first to see we actually move higher or want to move lower. Okay. All right. Let's just wait for this monthly to close. Let's wait for this monthly to close as well. Okay, took out that high. And now we have a monthly gap here as well. Small one, but still quite a range. It's also a busy. Let's fast forward this month as well. Okay, we're expanding higher. Prices, now moving lower. Came into that busy. Let me finish the next candle. Then I'll go into the weekly. Okay, so at this point, I think I'll go into the weekly. Okay, we're on the 1st of March. Price came out, took this repriced to this CB here on the monthly, and started expanding lower, breaking right through this busy and closing below it. So at this point, I'd be interested in the month of April to possibly take a trade here to target this low. Okay, so I'm gonna why I want to use this as an inversion monthly gap. Okay, however, there's this entire range here that I have to be careful about. So I'm going to go down to the weekly now and see what we have. All right, put this 1 pixel. Now I will annotate on the weekly. I have my expectations on the monthly. Let's see if I can find a better entry and more information on price on the weekly time frame. So we have a weekly CB here, CB 1 week. This is also a breaker. So a breaker of a CB considered a unicorn gap, which is also very high probability. We see it around the what do you call it, around the equilibrium point. So weekly, should I fast forward it? Okay, let's see what we get on the weekly. Let's wait for the next week to come. Okay, so now weekly we're in here. Price already expanded up. That's the problem with starting on the higher time frames. I'm on the daily now, and I will annotate a daily gap. Should be 1 day. This is also inside this entire order blocky range on a higher time frame. So, price also came to the one in here. This is inside the monthly area, inside the daily gap. So where would I want to target this? Possibly this monthly low. On the daily, normally I would go to the higher time frames and frame the wick on the monthly if there was one, but I'm afraid if I go to the monthly time frame now, it's going to show me the entire range and spoil my bias. Okay, so premium discount. This would be the daily wick. That is the first target, but I will go down to this is on March 22. Should be able to go down to the 4 hour. Okay, so that would be a first target. Let me go down to the 2 hour. See more gaps. We are somewhat in this consolidation. As you can see, gaps. Price would return into it, take out a low. Return to a gap, take out a high. Return to a gap, take out a low. Return into a gap, and not take out a high. At this point, we could actually possibly target a low. Not the best probability, but I'll show you how I would use an inversion gap. Okay, so let's just frame the trade here, small trade. See how it goes. It's in a consolidation, so this is it on the 4 hour. So we had price close through it, trade back into it, and now we're in here. Sorry, this is a 2 hour gap. Okay, so if I go down to the 1 hour, let me turn off any other messy things on the chart. I could try and go to the 30-minute. So let's see if price trades into here and then moves lower, or if it already did and then starts moving lower. Okay, actually, let me turn on these are the session timings. So if I'm on a lower time frame, I would use the sessions to have a better idea of liquidity and what it did in each session. Gray is Asia, London reversed in price reverse in London, New York continuation, New York consolidating. Okay, let's see if we get a gap. Okay, we could take a trade in this gap here. Okay, now the worry is that I can't see the 2 hour chart. Price may come back into the 2 hour, so not the best R. However, we see price breaking down. I'll just put a stop loss here, although price could very well come back into there. Okay, where would I target? First target this low, not the best RR. This low, the wick here, eventually here. If we did return into that monthly and we're moving lower, we can try a trade here. Entry in this gap here. This is 30-minute. I'm just highlighting the colors, and I'll just turn off the session indicator first. What time is this? Okay, we're about entering Asia. New true day open. Okay. Price consolidating. It took out this low. Like I said, this is always the highest probability target. Actually, the highest probability target would be this low, the one that made the gap, which seems like a very small target here. Only, what's this? We're on platinum right now, by the way. I didn't mention. This is only 1 point something pips. I don't really trade platinum, but I'm just backtesting, just doing this on different assets to show that it doesn't only work on one asset. Having a top-down analysis. So this is the highest probability target, the fair value gap low. If this was a monthly low, from the gap to the low, could yield quite a number of pips. So you'd use a higher time frame gap with this ideology, and you'd have different targets. One would be the intermediate swing low, and of course other discount PD arrays, and eventually if price was going to move lower, yeah, basically all the way to the bottom. But let's see what happens here. Okay, price is expanding back up. All right, so we're here now. We can enter in this gap again, possibly go lower. And there we go. Yeah, we come all the way to here. So wherever your target is, we were targeting here. So let's just call it what it is. It's about 1.6 R. But you can always target higher, lower. Okay, let's just see. You always have to go back on the higher time frames. We went to that 2-hour gap, right? That was our idea. Use this 2-hour gap as resistance. See, it came into it again. That's why it was a bit dangerous to have the stop here. But there's there's another gap here that got created. I didn't have a chance to see as well. In a live setting, you'd always have a chance to go to different time frames. In backtesting using TradingView, yeah, it shows you the entire candle if you go to a higher time frame, which is cheating and not actually proper proper testing. So let's see where we go. Okay, midpoint of that wick on the daily. We got a reaction and we are still moving lower. Okay, remember where our target was, this monthly low, and there we go. If you actually targeted that and you did a proper top down, that's 9R. Very nice. Let's go back to the daily. Reverse engineer. Remember, daily gap. Taking out that low. And remember, monthly inversion gap. Taking out that low. Weekly. No gap on the weekly. But as you can see, if you look carefully, there's a weekly gap here that got traded down. Price returned to it and used it as an inversion gap. So maybe on the 2-week, there's also a gap there. No. 5-day, which is the same as a week. We have a 5-day as well. Price closing below the 5-day gap here and returning into it. So that's how you use fair value gaps. And I think this is the right way, using it on a higher time frame. You can manage a trade on a lower time frame using this idea as well, understanding when to collapse your trade, take profit, etc. But yeah, that's it for this episode of Trade Like a Sniper. If you have any questions or you want to learn how to trade like this, it's a very reassuring way to trade when you actually understand what price is going to do, rather than relying on things like trend lines, RSI to kind of take trades. Maybe there was traders waiting for another touch to take a trade here. Didn't happen. Maybe they took it here. I'm sure RSI is oversold here. People are buying down here in an order block, even using smart money concepts. But if you understand it like this, the world is your oyster. And yeah, trading becomes really, really, really fun. Okay, so yeah, if you want to get in contact, you can leave me a comment. Or if you have any questions, leave me a comment or get in touch with one of my socials. Till next time, R2F signing out.